Who embezzles? Could be anybody. But the reality is, embezzlement occurs when desperation meets opportunity. There aren't that many people who, when they're hired, intend to embezzle and put you out of business. But what happens is, well, they just had some repairs to make, the water heater burst in the basement, and their radiator in their car sprung a leak, overheated, they had to replace the engine, and they're broke. They used all their credit. And then Aunt Mary dies in Washington, and they have to fly the whole family up to her funeral. It's going to cost $1,000. They can borrow $1,000 from you and pay it back before you even know. But before they pay it back, they find out that Susie needs braces, and that's $3,000. Well, the money's there, they have control, they can do it, so desperation meets opportunity. Usually, embezzlers don't wear this kind of an outfit. They don't look like crooks. In one case, it was a man's brother. Well, we discussed how to lose cash. Now let's look at cash from another way. Profit versus cash. Cartoon says, my accountant says I made money, but I can't pay the bills. What am I doing wrong? Well, cash pays bills, not profit. You see, profit is an accounting term. In accounting, in accrual accounting, that's what it's called, you recognize income you haven't received, haven't collected. You also recognize and do accounting for bills you haven't paid. And you come up with a result called net profit. Net profit doesn't mean cash flow. It's purely a coincidence if your cash flow ever meets and matches your net profit. Tracking cash flow is important, and let's look at it from another perspective. We call it cash management. Cash management is, do you know how to track how much cash you have? Do you track how much you expect to receive and when? Next question, do you track how much you're going to need and when? The answer is to create a spreadsheet. In your handout, there is a sample spreadsheet for you with columns set up. You can use that to forecast cash flow. I was managing a clinic, and I forecasted on April 1st that because the doctors had given themselves a retroactive salary increase, that we were going to be flat broke on July 15th. Well, I went to the board of directors and I said, okay, here's the situation. My cash forecast says we will not make payroll on July 15th. And they hummed and hawed. I had worked 18 months getting them out of the hole. And doctors who think MD means made deity were just certain, well, you fixed it once, you can fix it again, can't you? 18 months to try and compensate for their moment of foolishness was too much to reinvest. So I went home, had my phone unlisted, and I waited for the proverbial ship to hit the sand. And when it did, the practice was folded, their homes were repossessed, their cars repossessed, they lost everything. Now, from April 1st to July 15th, they had plenty of time to make adjustments. And that's what cash management is about. A friend of mine was in my MBA group, and he wrote his master's thesis on that, and he called his thesis, Cash Pays Bills, Not Profit. So cash management is a powerful management tool. You should use that. Well, let's take one step further with accounting. Is counting a necessary evil? A necessary evil, or is it the key to your success? As an entrepreneur, you should mark the 10th of the month. And what's so important about that? That's the date you should close your books. You always have current financial information, because knowledge is power. I was the controller for a company that moved their headquarters from Woodland Hills, California to Salt Lake City. In California, they took 90 days to close their business. We told them that we were going to move the closings to 10 days. And they said, oh, it can't be done. I was in a meeting of a bunch of a users conference for our software down in Las Vegas when a lady said, oh, it can't be done. And the truth is, if you believe it can't be done, it can't be done. But the reality is, we were able to get closings to 90 days, and the information was accurate. We had a slogan on top of our general ledger or journal entry forms, and it said, "Do it right the first time." This group down in Woodland Hills, California, they were making adjustments and making wild guesses for months after. And we established a policy of doing our accounting right the first time, and at 10 days we could close our books and never look back. The reality is, timely information is valuable. People use that information to make informed decisions. Accountants are in fact worth their weight in gold, but they have to be more than bean counters. And what's a bean counter? Well, let me tell you the story. There was a man in Europe in a hot air balloon. He was just about ready to take off. It was a bit of a cloudy day, and he was a little bit nervous. The wind came up, ripped the tethers, whoosh, up goes the hot air balloon. And he's in the clouds, and he's not sure which direction he's going. But he's going around and around, and finally he settles down. And he can see below him there's a green field, and there's a road. And as he comes down, there's a guy on a bicycle coming, and he yells down to him, "Can you tell me where I am?" And the guy yells up, "You're in a hot air balloon." And he yells back down, "No, where am I in relation to the earth?" "You're above a field of corn." And he yells back down, "No, where am I?" He said, "You're 50 feet up." And he answered, "Are you an accountant?" "Yes, how did you know?" "Everything you tell me is absolutely true and totally worthless." Okay. Now that's a bean counter. That's not an accountant. An accountant is someone who says to you as the owner of the business, your margins have slipped. That last job you bid, or that last order that you made, that last custom sale that you made, you sacrificed some profits. And as a consequence, your margins are going to go down. Your bankers are going to be wondering why your margins have slipped. And a good accountant might say, your collections have run from 30 days, you're now at 90 days. We need to do something about that. Or do you realize that your accounts payable are now running 45 days past due? An accountant provides feedback. When I worked for Dun & Bradstreet, I would go to the business owner and I would write their credit report and get a financial statement. Very, very often, people would send me to their accountant with a little note that said, "Please give this man from Dun & Bradstreet my financial statement," because they had never seen it. They didn't have a clue. That is not a way to run a business. It's like putting a blindfold on and then crossing on a tightrope. It's not a good way to do business. You need to also always understand the difference between your actual costs and your budgeted costs. That spreadsheet that I showed you, you do your forecasting out there months in advance, and then when you get to the real day and you have your real collections, you enter those actual numbers, you enter your actual accounts payable, and you reconcile to what you actually have in the bank. That is cost control. Now, if you're in the building industry, is there anybody here in the construction management program? Whoa. Everybody's in construction management. Excellent. So you know what job costing is. We sell job cost accounting software, and we deal with people who don't use job cost accounting software. They use spreadsheets, and they use the cheapest software they can get at Sam's or at Costco. And we have a word for contractors that don't do job costing, and that word is bankrupt. Because if you don't control your costs, they'll put you out of business. We have a customer who uses our software in Orem, and someone called from that customer about 5 or 6 years ago and said, I'm trying to learn how to do your payroll on your software, but I'm having a real problem. I've played with it for about an hour and I've messed up the data. I need your help in restoring my backup. So, okay, we'll step you through that. And we explain now, here's what you do. You copy and give him the whole procedure. And he did it exactly backwards. He copied over the bad data, copied his bad data over his good data, destroyed his backup. And finally, the tech support guy said, "How old are you?" And he said,